What if the biggest shift in global banking is already happening quietly, right in front of us? Hey guys, welcome back to Whiteboard Crypto Update. In today's video, we will talk about XRP. So be sure to stay focused, as you surely don't want to miss out on this. If you are new to the channel, be sure to subscribe to the channel and turn on post notifications by hitting the bell so you never miss any of our uploads. Please remember, this is not a financial advice video. It is now becoming impossible to ignore what is unfolding behind the scenes. The connection between JP Morgan and Ripple has moved from speculation into something far more concrete, yet it is still flying under the radar for most people. In this video, I want to walk through a new development that is not getting mainstream attention, explain why it matters far beyond short-term headlines, and connect it to what could be shaping up as a very important period heading into 2026. I also want to talk about XRP's long-term price behavior because there is a recurring trend that continues to show up no matter how much daily noise surrounds the market. Not long ago, I shared a viewpoint that went against what most of the crypto industry was saying at the time. While the majority were focused on short-term price action and speculative narratives, I argued that something much bigger was happening quietly in the background. Based on what we are seeing now, that view looks more solid than ever. Let's start with the news that is not being widely discussed. JP Morgan has announced a strategic partnership with G Treasury. On the surface, this may not sound like a major crypto headline, but the key detail is this G Treasury was acquired by Ripple earlier this year. This company is deeply embedded in the global financial system, connected to more than 13,000 financial institutions, and responsible for settling roughly $6 trillion annually in the treasury market. When Ripple made this acquisition, many people overlooked it. Today, it is starting to look like one of the most important moves Ripple has made. Ripple's approach is very different from most of the crypto industry. Instead of chasing flashy startups or high-profile brand names that add little real utility, Ripple has been quietly targeting critical financial infrastructure. These are companies that already sit at the heart of banking operations, with long-standing relationships across the most systemically important institutions in the world. By bringing these firms in-house, Ripple is not asking banks to experiment with blockchain. It is embedding blockchain access directly into the tools banks already rely on. One of the biggest challenges facing blockchain technology has always been adoption. The technology itself is advanced, but convincing legacy financial institutions to abandon or even modify existing systems has been extremely difficult. Many banks simply do not want to change because doing so can disrupt profitable parts of their business. Ripple's strategy effectively removes that choice. By acquiring infrastructure that banks already depend on and then moving that infrastructure onto blockchain rails, Ripple is forcing a gradual but unavoidable transition into a digital settlement era. What Ripple is building can best be described as next-generation banking and settlement infrastructure. Instead of expecting every major bank to hire its own blockchain developers and build custom systems from scratch, Ripple is creating a platform that institutions can plug into. Through customized software and user interfaces, banks gain access to blockchain functionality without needing deep technical expertise. This is critical because high-level crypto talent is scarce, and the best developers are not lining up to work inside traditional banks. Institutions like JP Morgan will inevitably rely on companies like Ripple to stay competitive. This is why partnerships like the one involving JP Morgan matter so much. They are not about marketing announcements or short-term hype. They represent back-end integration. And when you understand Ripple's product design, it becomes clear why XRP is central to this story. Ripple's leadership has consistently stated that XRP is the core asset powering its ecosystem. As Ripple expands its reach into major financial institutions, it is effectively creating gateways into the XRP ledger. No one should expect an overnight switch where trillions of dollars suddenly move onto blockchain in a single moment. That is unrealistic, but once the expertise, software, and operational processes are embedded inside these institutions, a one-way bridge begins to form. Assets slowly migrate from legacy rails to blockchain-based systems, and historically they do not move back. What makes this even more interesting is that recognition of this shift is no longer limited to the XRP community. Recently, a former commissioner of the CFTC publicly shared a post involving Ripple's CEO, signaling awareness of the transformation taking place. These are not casual gestures. When experienced regulators and insiders openly acknowledge these developments, it suggests that something significant is happening beyond retail speculation. For years, critics claimed Ripple's partnerships were meaningless, that they were just documents with no real execution. Yet over time, real integrations began to appear. Collaborations with global payment companies, central bank pilot programs, and now deeper ties to major financial institutions. Even some longtime skeptics have started to reverse their positions, admitting that Ripple's strategy may have been misunderstood. When you step back and look at XRP's long-term price behavior, another pattern emerges. Ignoring daily volatility and focusing on yearly trends, XRP has historically spent long periods moving sideways or appearing stagnant before making sharp upward moves. This behavior was visible before major rallies in the past. While Bitcoin and Ethereum often experience gradual run-ups, XRP tends to remain quiet, testing investor patience before suddenly breaking out. There is no definitive explanation for why XRP behaves this way. Some argue manipulation, others say coincidence. The truth is, no clear proof exists either way. But it is difficult to ignore that XRP moves differently from most of the market, despite consistently being associated with real-world financial integrations. While other assets rely heavily on retail-driven momentum, XRP's movements appear more sudden and structural. Whether intentional or not, this pattern has historically resulted in many people losing interest just before major moves occur. By the time attention returns, price levels have often shifted dramatically. This does not guarantee future outcomes, but it does highlight why focusing only on short-term fluctuations can be misleading. The broader crypto market spent years struggling through capital shortages and speculative cycles. During that same period, Ripple continued acquiring companies and expanding enterprise-grade infrastructure. This divergence is important. It shows a clear difference between projects focused on experimentation and those building long-term financial systems. Ultimately, price action will always fluctuate in the short term, but infrastructure development tells a deeper story. And when you look at what is being built, who is involved, and how quietly these pieces are coming together, it becomes hard to dismiss the direction this is heading. As we move closer to 2026, these developments are likely to become more visible. The question is not whether the system is changing, but how long it will take for the broader market to fully recognize what is already underway. Well, guys, that's all we have for you today. What are your thoughts on XRP? Get involved and let us know in the comments down below. Thank you for watching, and we will see you again in the next video. Goodbye.